Ripple XRP's chart has been one of the most frustrating charts to watch in crypto, while we see projects like Solana rally up over 147% in the past month. And everyone's wondering, when will XRP go to the moon and what's happening with this project? Because there's clarity. The lawsuit is pretty much over. Sure, there's some dates that we're going to be covering in this video to look out for on what to expect and when the end will be in sight for this project. But there's also some good news on why XRP could be one of the best performers in this bull run cycle, regardless of its lackluster performance the past few months post lawsuit. I'm going to be getting into the XRP price chart. I'm also talking about the S&P 500. I'm talking about the 10-year to 2-year treasury yield curve inversion and a red flag to watch for on what could be the black swan event to hit the crypto market, to hit the stock market, to hit the real estate market, being the government bond yields and what I see on the chart happening next. So make no mistake, we are extremely bullish on the crypto market right now, and I have some projects to share with you guys on what I believe is going to happen next for, not only Ethereum, but the altcoin market that you need to be ready for. So comment 777 if you're feeling blessed, comment 777 if you're feeling bullish. We have a jam-packed video filled with value that you're going to love. So I will see you, as always, on the green. When you take your putter, you grab the like button and you tap it in. You give it a tippity taparoo, because we're beating the SEC. We're buying grandma's house back with XRP. But in order to do that, you got to sink the putt. So go ahead and do that right now. Let's run it. All right, bull runners, welcome back to the channel. So with XRP sitting at 61 cents, down 8% on the week, it's just not fun to see this happening, right? We want this project to go, but you got to understand realistic expectations, and also you got to be prepared for the worst too, and know how to diversify while we see, the worst take place. So what are we looking at right now? Well, what's the worst that could take place in these markets? And also, what's the best? And then what's the most likely case scenario? Well, let's look back in the past on what happened with Ethereum during the last bull run, because Ethereum, whether you like the technology or not, or whether you like Vitalik Buterin or not, doesn't matter. Ethereum's been the leader of the altcoin market because it has the largest market cap. And when we look at the last bull run and we saw Ethereum fall from, upwards of $1,400, we saw the complacency stage take place right here. And this was also the dead cat bounce, where a dead cat bounce, very simple. When you see the price fall from, an all-time high, a parabolic blow off top, you just see it bounce on the way down. And so the first dead cat bounce, created this resistance level right here as support. Once it broke down below it, it acted as resistance on the rally of June of 2019 right here. And about at the 200 moving average as well too. Actually the 50 moving average in red that you guys can see. And then the price crashed down from 2019, tried to rally up again, crashed one more time for the black swan event of COVID. And then when it broke above it, this acted as a major area of resistance that it struggled to, stay above. You saw it go back down below it. But when we rallied up from here, Ethereum pulled a 1,478% rally, which is a 14x for Ethereum from the low of August of 2020. And so if we were to look right here on what's happening with Ethereum, we can see a similar chart pattern play out, except the only difference is the magnitude of the rally of 2019 compared to now. You see the magnitude of this rally was 342%, whereas Ethereum hasn't really seen that big of a rally from the low. We've only seen 140%. A 342% would have put Ethereum, back at $3,700. But interestingly enough, the fall wasn't as big as the last drop as well too. The last drop was about 94% for Ethereum, whereas this drop was drastically less to the downside. It was like 82%. So the rally was smaller for this rally, and the drop was also smaller. Now, could that mean that the rally out of the bear market lows going into this bull run would be less than 1,478%? I think that that's the most likely case scenario, because the law of diminishing returns on this planet states that, when you do something often enough, a ratio appears, and the more that you do something, the returns diminish over time because there's more liquidity in the markets. It takes more money to move the markets, and just the volatility that we see is less and less over time, because as regulation comes into the market, we're not going to see these crazy price swings, because institutions are going to be, backstopping their investors' money by just buying back, what's sold off. So they'll be scooping it up to support healthy healthy price levels. You know, we see, that's why we don't see the stock market, you know, shooting up as rapidly as the crypto market because of the law of diminishing returns, because the stock market's been around for a lot longer. So what I think is going to happen next for Ethereum, granted, we don't see a black swan event that shakes everyone out and drops down from here. Granted, we don't see this based on what I'm going to share with you guys at the end of this video in the bond market affecting crypto. If we don't see this take place, again, not financial advice, don't buy Ethereum, don't sell Ethereum. I'm going to be talking a lot about XRP and Ethereum and some other projects on this channel that you guys can watch. But if we break this support right here of roughly $2,150 and this resistance, and we hold it as support, I think something playing out similar to what happened right here in 2020 before Ethereum pulled a 14x is a likely case scenario. But I don't think Ethereum is going to pull a 14x. You know, I think maybe a 5 to 10x for Ethereum is in the books. I could see Ethereum at between $5,000 and $8,000 this bull run cycle. But I would expect Ethereum to see a push upwards. And I talked about this in yesterday's video where Bitcoin has seen the rally past the high of 2023, whereas Ethereum is still below the high of April of 2023, and we haven't broken this resistance yet. So this resistance is acting as a major threshold for Ethereum to push through. And once it does push through it, you know, I think we're going to be camping on the beaches of the moon. Now, one thing that's interesting to note is looking at the moving average, we see the 20 moving average in blue, and we also see the 50 SMA in red. The 50 SMA in red has crossed below the 20 in blue. Similarly enough, back here, when we saw the 50 cross below the 20, Ethereum was rallying out of the COVID lows right here. So we could arguably be in one of these stages right here before we see a massive run for Ethereum and the rest of the altcoin market cap. Now, also looking at the total too, which is the crypto total market cap, excluding Bitcoin. So it's Ethereum and all altcoins. Look at the last drop that took place. It was a 92% drop, followed by a rally in 2019 of about 276%. And then once we broke out from this resistance right here, from the support, you know, before the dead cat bounce, in the complacency stage, we saw 1,300% from the low of August of 2020. So that's a 13x for the entire altcoin market cap, excluding Bitcoin. So a 13x, not too shabby. That's pretty good to be on board right before the markets break out. And then we saw the markets top out, you know, in October of 2021. And then we saw the markets drop 74%. So 92% drop from January of 2018 to December 2018, 74% drop from October of 2021 to June of 2022. Now, how big was the rally from June upwards of this resistance? Only 52%. And so the rally is a lot less now. Law of diminishing returns now. But interestingly enough, the chart's looking somewhat similar to Ethereum, where you can see this massive resistance right here that acted as support after the high. We see the dead cat bounce, the complacency stage. A lot of people think that the high is actually right here, but no, the high was right here. And I've shown you guys this several times. May of 2021 on Google Trends, you can see that the search volume was the most popular for the first peak, not the second peak. The second peak as well on the RSI, if we pull up the relative strength index, you guys will see that the second peak on the market was actually a lower high on the relative strength index, whereas the first peak for the market, you know, on the RSI was higher. It was upwards of 90. The second peak was only 73 on the relative strength index. And so the charts were showing that the first high was the high. This was the dead cat bounce in the complacency stage. And then we dropped 74% from here. And so where we are right now is we're breaking out of the low on the RSI. We're currently sitting at 59. And so what I feel is going to happen in the short term is we're going to push upwards of this resistance and we're going to flip it as support. Now, how high we push is anyone's guess. We could come up to this resistance right here that you guys see from January of 2022. It acted as support right here for another bounce for the markets, you know, as we then fell off a shelf during FTX, Celsius, Terra Luna collapse, all of that stuff, draining into the altcoin market. But I believe that would act as the next support, as the next resistance to look for. So right here, roughly around $850, $870 billion, all the way up to even like $930 billion, somewhere around there for the altcoin market. So we could push up that high before we see a correction come down, but somewhere between this range right here, I would expect the altcoin market to top out, consolidate for an extended period of time until Bitcoin's halving. And depending on how low that correction is, would be determined based on how high we're going to push up in the short term over the next 1 to 2 months. So watch this line of resistance right here. This line of resistance, roughly 670 some odd $billion for the market. So we start pushing upwards of 700 billion, then 750 billion, and we just start to see the altcoin markets go crazy. Err on the side of caution because a correction will be coming, but that is a good sign because, like I said, last time we saw something like this happen, we pushed above, the resistance of 2019 on the candle body close. At least we pushed above it another 42%. So if we were to push above the candle body close of the rally of April of 2023, let's just say half of that, 20%, we would push upwards of $800 billion. So I would expect an $800 billion push, meaning we're at $644 billion right now. So another 160 some odd billion dollars to flow into the altcoin market before a correction. What would cause that? Well, interestingly enough, a $4.5 trillion asset manager named Fidelity has officially filed for a spot Ethereum ETF. All of you guys know about the spot Bitcoin ETF. We've been talking about it almost every single day. I know it's like a broken track record. You don't want to hear about it anymore, but this is the massive because this move follows BlackRock, who filed for their Ethereum ETF application last week. And the official SEC filing recognizes Fidelity as a responsible for the Trust Ethereum, while Delaware Trust Corporation is the trustee. If approved, Fidelity will provide spot Ethereum ETF services to its clients. Thus, new institutional clients can open the gates to the cryptocurrency market with Ethereum. The floodgates will open with Ethereum. I've been talking about this, guys. Don't count Ethereum out. It's the largest altcoin. So Ethereum has yet to pull a Solana type rally. Solana's seen its rally. I talked about in the last video, Ethereum hasn't seen its rally yet, so Fidelity proposed to list and trade shares of Fidelity's Ethereum fund on the CBOE BZX exchange, the filing stated. And according to the registration statement, each share will represent a fractional, undivided beneficial interest in the trust's net assets. The trust assets will consist of Ethereum held by the custodian on behalf of the trust. And so this is big. This is not going to be something just to sneeze at, and that's what I think could push Ethereum upwards of 800 to 900 billion dollars in the short term, similar to what happened right here in August of 2020 before we saw a correction take place. Now, how long, when Ethereum peaked out right here, how long did it take before it passed it again? It took it another 108 days, so another 3 months before Ethereum passed. Actually, no, this was the crypto total market cap minus Bitcoin, so it took another 3 months for that to take place. But for Ethereum, how long did it take for Ethereum to pass the high of August of 2020? Well, it took about 84 days from that period. So Ethereum could push upwards of $2,500, and right now it's sitting at $1,959. Sure, that's not like a 4x or a 5x, but it's a good start nonetheless, because then what will happen here, and I could be completely wrong here, guys, I'm just speaking out loud, it's not financial advice, so don't buy, don't sell anything, right? I could be completely wrong here, but what I feel will happen is then people will use Ethereum to trade into altcoins on Ethereum. So the ERC20 altcoins that are built on Ethereum, which is the majority of the market. So the majority of the market is going to use Ethereum and benefit from it. Now, a project that I'm super bullish on that we have yet to really talk about on this channel that I could see having a breakout here soon is Internet Computer, and this is ICP. Now, this project right here is over $1 billion market cap, but the chart is looking very, very obliterated right now. It's been destroyed. It's sitting at $4.32. And this project, people are like, whoa, what happened here? Well, it launched, the chart shows this wick at $2,900, but I think it launched at like $400. And so right here, this is drastically undervalued. The reason why it got destroyed was because it had to deal with FTX, and Sam Bankman-Fried drastically manipulated this project right here. Also, they launched in a bear market while everyone was selling off. So early venture capital money and early investors, they were just selling everything, guys. And so this project, it's very impossible. It's very, very difficult. I don't want to say it's impossible, but it's very, very difficult to see a project succeed in a bear market when everything's selling off and everyone's getting out of Bitcoin, everyone's getting out of Ethereum, everyone's getting out of the altcoin market. And so this project had to find a bottom somewhere, and the bottom ended up being September 2023 at about $2.70. So it's just barely off the bottom, just barely off the bottom, 70%. And so I think if this project can hold this descending resistance right here, it's looking like it's holding right now. We see one candle body close. We need to see another candle body close above it as support. I think this project can push upwards to retest this zone of resistance right here, April, February, even back in July of 2022. So how far away are we from the zone of resistance? Well, we're about 58%, 90%, potentially upwards of 127% if we go all the way back to the wick of July of 2022 before we see some form of correction to the downside to roll over, similar to Solana. See, if I pull up Solana's chart, you guys can see the similarities here in the chart, and you can see some of these projects that have yet to rally because they just don't have the attention right now. You know, it's very difficult for a lot of these projects to get the attention when one of them is moving first. And so we see Solana's chart absolutely crush it and break out right now. And so what do we see here? We see this descending resistance right here, and we just see Solana push from $22 upwards of $58. And so once we broke this, I mean, we rallied 196%. And so we're just breaking this right now to the upside. You know, what could we see happen next? Well, I think we're going to see some massive price action for internet computer because not many people are talking about it right now. And that's a good sign. You don't want a lot of influencers. You don't want a lot of people talking about something. If it has strong fundamentals, strong team, strong technology, strong tokenomics, and not many people are talking about it, best believe that they will eventually. And when's the best time to be learning about a project? It's when nobody cares and you know that that project's rock solid, right? When's the worst time? It's when everyone cares and a project's already pumped 158%. I can almost guarantee that Solana is going to see a retracement here soon. And how far down will Solana go? You know, it could bring Solana all the way back down to 35 bucks, 37, maybe $40. Then I might buy some more Solana. But why would I be selling, you know, a project like Internet Computer and buying Solana up here when I think Solana might be coming back down in the short term and then consolidating sideways and sitting on Solana for 2 weeks to a month or more while it tries to recover and, you know, break the current high that it's at right now, when I see Internet Computer's chart looking a lot more bullish. And I mean, how far away are we from previous highs that we saw back in August of 2021? We're 1,900% away. We're a 19x away from $86 on Internet Computer. How far away are we from Solana's all-time high right now? We're 300%, so a 3x. So risk to reward ratio here, a 3x versus a 19x right here. I think you guys can do the math on this. And when you do your research on Internet Computer, I'll talk about it in more videos, you guys will see how rock solid this project is. Internet Computer, one of the best projects in this bull run cycle. And if we look at it on CoinMarketCap, you know, ICP, I think is going to do very, very well. You guys will be very shocked at what this project's going to do. I think it's going to honestly melt faces. It's sitting at number 36. It's a $1.9 billion market cap. So that might seem like a lot of money, but I mean, XRP is what? Like $30 billion. What's Ethereum at? What's Bitcoin at right now? And then you look at the chart on all, you know, lots of whale institutional money is going to flow into this project, I feel. The circulating supply is at 449 million. The total supply is at 509 million. That's a good sign because the majority of the circulation, the majority of total is already in circulation right now. And we see the fully diluted market cap is not too far off from the actual market cap, meaning that venture capital money has already dumped off the majority of their Internet Computer. Hence why the chart looks the way that it does, getting absolutely destroyed. But if we were to take, you know, this falling wedge right here, you can take the whatever point of the wedge that you want, because it's just an ongoing, never-ending falling wedge right here. You can take this point of $8. You can take this point of $86. I don't think we're going to hit $86 in the short term, obviously, but I think something like, you know, $6 to $8 is not off the cards for this project. And then a correction would come after that, obviously, probably bringing it back down to where we are right now. And so, you know, I do hold a position in Internet Computer because I'm bullish on this project. That doesn't mean that you should. I just believe you should do your own research on this because the chart is looking a lot better right now than something like Solana, because Solana has already seen its rally. Now, according to Mike Christo on Twitter, make no mistake, you know, what's been happening with Twitter right now with advertisers pulling money from X, it's not because of Elon Musk's recent statements, but because the US Treasury bond market will collapse on Monday, he's saying. Will this happen? European Central Bank, T2S on Monday. Federal Reserve, ISO 20022 on Monday. The globalists have lost the monetary reset. And so, will this happen? this is an interesting prediction from him right here, because when we look at the US 10-year yield, let's talk about what this means. And then I'll get into the chart too, so you guys can fully understand this, because the importance of the 10-year treasury bond yield goes just beyond understanding, ROI for this security, because the 10-year is used as a proxy for many other important financial matters like mortgage rates, the real estate market, what happened during the 2008, subprime mortgage crash. This bond also tends to signal investor confidence, where the US Treasury sells bonds by auction, and yields are set through a bidding process, and prices for the 10-year bond drop when confidence is high, which causes yields to rise. So yields have been rising because confidence in investors has been high. That's why we see the stock market rallying up, the crypto market's been doing well, and this is because investors feel they can find higher returns on their investments elsewhere and do not feel the need to play it safe because markets are frothy. Everyone's making money, and meme coins, were shooting up like crazy. So people are just dumping money into anything in the crypto market. But when confidence is low, bond prices rise and yields fall, as there is more demand for safe investment. Put simply, falling yields indicate caution in the markets. This confidence factor is also felt outside the US, as it points to the future of the global economy. The geopolitical situation of other countries can affect U.S. government bond prices, as the U.S. is seen as a safe haven for capital. This can push up prices of U.S. government bonds as demand increases, thus lowering yields. And so when we look right here at the 10-year, we can see we're sitting at 4.439%. Now, then a red alert here, an alarm, a warning to look for right now is a deviation on the chart, okay? We see this rising wedge formation where we see higher high right here, higher high right here, higher high right here, higher high right here. So why is this not good? What's the red alert? Well, on the RSI, the relative strength index, not only do we see the peak of the RSI right here at 86, but we see lower high right here. While on the price chart, we see higher high. We see lower high on the RSI right here. While on the price chart, we see a higher high. What does that signal? That signal that a reversal is coming for the yields, and that the yields, if we're making lower highs on the price chart or on the RSI and higher highs on the price chart, and we're in a rising wedge formation, we've seen this time and time again, guys. We brought this up on the channel. Eventually, when this upward trending support line breaks, we could retest it, but then we're going to go down. We're going to come down. Now, interestingly enough is, then we'll see the actual highs on the price chart match up with the highs on the RSI, and we'll see lower highs, and we'll also see lower highs on the yield percentage as well too. It'll start to match up. Now, that doesn't mean that we're just going to break to the downside right now, because just like we've seen higher highs on the yield percentage, on the candlesticks, we could see the same thing play out again, where we just push higher in this wedge, where we just see another higher high on the yield percentage, and then we also see a lower high on the RSI. But at some point, something's got to give. Now, compared to the past, let's look at what gave in the past. Well, we saw something like this happen again. We saw a rising wedge from the yield prices dropping down. We saw a brief recovery. And how long did this recovery last for? Well, it lasted for 847 days. How long has this recovery from the low out of COVID last for? 1,197 days we've been rising. Can't rise forever. Something's got to give. A crash is coming, guys. You have to be ready for this. Now, the real question is, will this affect the crypto market? Is this the black swan event? I'm curious on your guys' thoughts here, right? So those of you that have been in the market for 10, 20, 30, 40, 50 years, how do you feel that this is going to affect the crypto market? Because when we look at the S&P 500 and we compare it to the last time that this happened, well, we can see the last major crash in the percentage of yield was from 3% all the way down to 0.3% for COVID. And COVID didn't happen in 2020. It happened all the way back here in 2018, really, it started, right? The yield percentage started dropping. So bond prices were rising, yield percentages were falling. We saw a break of this ascending support right here. And then we just trended to the downside right here. We also saw something similar play out on the RSI, right? You saw this rising wedge formation, break to the downside, then the RSI drop. We're seeing something a little bit different play out, obviously, because we're in different situation, pre-COVID, right? Because now interest rates from the effective federal funds rate is a lot higher compared to what it was like back in 2018. It had rates next to nothing when they were dropping rates. And that's when the Federal Reserve, decided to pivot. The time before then, if we look at the last major market crash, well, what happened there? October 18, we crashed. We dropped down 20%. That was during a bear market in crypto as well too. Down 20% on the stock market. The time before then, let's go all the way back to 2007. Let's see what happened right here. Well, we dropped on the yields. And that was honestly pretty trippy how accurate this was compared to almost to the peak of the 2007 bull market rally for the stock market. We peaked out around October 15th, middle of October 2007. So what was happening middle of October 2007? We were on our way down on the yield percentage. So we peaked out in May of 2007. So the yield percentage peaked out at about 5.2%. And then the stock market, the S&P 500 peaked out after that. But then we dropped down for a while. I mean, we dropped down all the way to 2012. But right here, December of 2008, we dropped and we bottomed out at 2% before seeing a relief rally for an extended period of time. So how long did that take? From here to here, it took about 567 days. So where were we December 18th of 2008? Well, December 18th of 2008, we were right down here, almost near the bottom. We had another little bounce and then boom, the markets were at the bottom. The S&P was all the way down 671. And so from the top to the bottom, we dropped 57%. Could that be what's coming to the stock market? Because the drop that we saw right here was not a 2008 or 2000 drop. That was only 27%. So this relief rally that's happening right now honestly could be a retest of this upward trending support line in yellow that you guys can see right here. Obviously, we've dipped well below it during COVID, but that was a V-shaped recovery. We dipped below it in 2018, another V-shaped recovery. So these could have been the fake outs right here, that everyone thought the markets were going to keep going down, which you can't really predict how low it's going to go. And you can't also predict if it was going to pull something like this where we recover out of here, but then we go even lower. No one knows what was going to happen. It's unpredictable. You just have to be well diversified. But what we're seeing right now is we see this upward trending yellow support line. Well, we broke below it, but it hasn't been a V-shaped recovery. It's been a battle to try and get back up above this support right here. And we got rejected from it. We got rejected from it in July, and now we're trying to come back up again. Could this be the last rally before we see another crash to the downside? Or will we push higher, with the yields, still making higher highs for the yields before we crash? One thing to note, guys, is I talked about this in previous videos with the 10-year to 2-year Treasury constant maturity. This is the inverted yield curve, meaning that when we see this inverted, it means that the 2-year bond is outperforming the 10-year, which signals that a recession could be coming. Because when we go and we sort it back on max, we saw the last time we really dropped down below here and then reversed out of here hard was 2007. We're not going to compare 2019 because we were just right at zero, so it didn't really dip down below it. We were well below it the past year, but right here, 2006. It wasn't until the yield went drastically into the positive on this inverted yield curve right here in May of 2007. So in May of 2007, where were we on the S&P 500? March, April, May, June, July, right here. Okay, we were right here, right before the yields started dropping on the 10-year. So the yields were doing well in May of 2007. We were right here. We were at 5.3%. Then we started dropping on the yield percentage. So what's interesting is we're doing pretty well on the yields. If we've topped out, then that's not a good sign for the stock market, because then that could mean lots of pain ahead. And this little rally right here is just a macro version of this expanded outwards. So if I were to trace this for you guys so you can see, what this might look like if I were to expand this outwards, so you can see that okay, this dip that took place might just be decades worth of pain coming right here. It would look something like this, right? Where you'd see now this little short-term recovery, we see a drop and then another bounce and then another drop all the way down here. Could we be that would be like the roaring 20s, where we come all the way back down to the high of 2007 to retest that. that would be disgusting. That would be disgusting. And that would probably play a role into the crypto market as well too. And then financial reset. Okay, they'd have to shift over to CBDCs, reset the entire monetary system if something like this were to take place. I hope it doesn't happen, because that would be horrible. Businesses would shut down globally. It'd be worse than COVID times 100. It'd be worse than that. But it's not off the table. So, you know, hey, I'm indifferent with anything. If that happens, bring it on. We got God on our side, right? And if crypto gets destroyed, if the stock market gets destroyed, if real estate market gets destroyed, what are you going to do anyways? What are you going to do? We got money and lawyers. Bring it on. What are you going to do? There's nothing that you can do, right? You can't really, because gold might even take a hit. You know, everything would take a hit. And during the pandemic, gold took a hit as well too. Everything gets crushed. And so you just got to stay right by God, and you just have to have money on the sidelines to get ready to buy the dip of something, right? So maybe cash. You guys let me know your thoughts there. But either way, when the 10-year to 2-year goes back into the positive and it flips quick, expect something to happen. We don't know what that is, but if the past is any indicator, it's not looking too hot for the stock market. Now, the crypto market's another question, because we've been decoupling from it recently. But when you look at XRP, the real question is, will XRP be that showstopper that just defies all odds? That's the wild card right there, right? That's the wild card that some people are expecting to happen, because XRP would be the bridge currency on the XRP ledger to bridge, you know, the central banking digital currencies and the new monetary system. ISO's going live this whole entire month, ISO 20022, and Ripple has major connections, you know, and partnerships with all these banks and the IMF as well too. So could there be something there? Well, this lawsuit needs to come to a conclusion, and what's going to happen here, according to a letter by Judge Torres based on the parties' previous letter detailing the availability, February 12th, 2024 was set as the date by which both Ripple and the SEC should have concluded all discovery related to remedies. The regulator will be given up until March 13th of 2024 to file its brief on the restitution it seeks, and Ripple will submit its opposition if it deems necessary by April 12th, 2024. So John Deaton suggested that Ripple is likely to pay less than $770 million the SEC is seeking in damages, and $20 million or less would mark a monumental legal triumph for the payment firm. And right now, I mean, XRP still sitting at 61 cents right now. And so we've seen XRP do very, very well in the past out of nowhere. You know, XRP has just snapped. So could this be where everyone runs to as the stock market is collapsing and they're resetting the financial system and they're backing things to XRP, revaluing gold? Could this be what everyone's talking about? I know there's a lot of riddlers out there. I know there's a lot of theories out there, but you know, all signs are leading to XRP being that currency, but the price is not showing it yet, because the whole monetary system has to be ready yet. The railway, okay, on the choo-choo train track has to be ready before you run the train across the track. If the train, so to speak, is XRP and the track is not ready yet, then it would fall off the track. Even though the train is built for speed, the tracks need to be ready to run. All right, so the tracks are being laid right now. ISO 20022 is getting ready, and we're just breaking out of the disbelief stage right now. Sure, you can see on the left-hand side of the chart, this rally will fail like others. If there's doubt that you feel from this video, let that doubt, you know, inspire you. Don't get too excited yet, because Black Swan event could be coming. So you just got to have some dry powder on the sidelines, because if it happens, you can't say I didn't warn you. You can't say I didn't show you, and you can't say that you weren't ready. So I appreciate you guys for watching this video, because hope, belief, thrill, and euphoria is coming next. And emotionally, you're going to be ready. You're going to be grounded. You're going to be prepared as we back up our truck all the way to the bank. We grab the bags, we pack them and stack them, leave no bags left behind, because the spending power of the dollar has been going down in value. That's a fact based on inflation. Blockchain technology, distributed ledger technology, and cryptocurrencies have been going up in interest. That's the truth. And together, you know where we're going. We're going camping on the beaches of the moon, my friend. I will see you on the next video. I will see you on BULLRUNNERS.com, where you'll discover our top cryptocurrency gems, top picks, and proven strategies to make money online without any previous trading experience. All you have to do, click the button on the page, put in your best email address. You'll be instantly subscribed to our video newsletter, and you'll receive breaking news updates and top picks before the algorithm can push these videos to you, because by the time that YouTube pushes it to you, it may be too late. So you need to watch these videos right when they come out. You gotta like them, you gotta tap the subscribe button and sink the putt, because you know who we're doing it for. We're doing it for grandma. We gotta buy her house back, and the SEC has already been beat. We're just making the victory lap right here. All right. So I'll see you guys on the next video. I'll see you on bullrunners.com. As always, stay bullish.